Hello and welcome. Today is Tuesday. It is the 30th day of September 2014. My name is Derek. Welcome to today's silver chart analysis for the final day of the month and the quarter. Today's action down yet again, 1.25%, hitting a low of 1710, levels not seen since June of 2010. That's about a 52-month low. It's been in a downtrend, of course, for 3 consecutive months, spending most of that time below the 18 average of lows. In fact, it hasn't been above that point since in here. This bear setup has been larger than I would have anticipated. For failed breakout, you'd expect a fast move down to about here. Oh, so far it's been to at least 1710. So now let's take a look at this on another time frame. We'll do it on the monthly time frame. For the month, down 11.4%, so a double-digit monthly loss. And it's looking as if one of two things is going to occur now. It's a defining month within this major break of support. For the first one is leg number 2 within this multi-month bear market. And a situation here, you were in a bull market here, you had a failed breakdown because it recaptured the range pretty fast and then broke higher. I don't count this as a multi-month bear market. Here, I do. Therefore, you have the situation of correctionary phase, breaking key support in here, which was the start of the multi-month bear market as it did not recapture the range, of course. And then, of course, a year and a half of a descending triangle breaking below. So multi-month bear market leg 2, you would expect at least to go down to the 15 to 14 area. And the second thing is failed breakdown, fast move to the upside. Generally, what I need to see for that is a relatively quick move back within the band, which would be a couple periods, 3 periods. Of course, this one took about 4 or 5, but generally speaking, 2 or 3 periods to get back in it, which is by the end of the year, and then a couple of periods after that to get above the 18 average of highs. Those are the symptoms that I look for that situation to come into play. Now let's take a look at this on the quarterly time frame, which has a situation of a bull market starting here, heavy correctionary move here, nothing to break the trend until what's looking like now. Therefore, this is either the start of the multi-quarter bear market, so maybe we'll have 40, 50 periods, 10, 12 years of lower highs and lower lows on this chart. I think not, but within the powers that be doing what they're doing, I guess you could say it wouldn't surprise me, but I am not a fan of the fiat currency system. To me, it is a major insult to call fiat currency money, use it as such when it is an instrument that guarantees debt on a simple mathematical level. Well, how simple? Well, only the central bankers, Federal Reserve, etc., whichever country you're talking about, can create such. They mine it by pretty much printing it, and then they give it, no, they don't give it to you, they will trade you debt for it, which means pay interest. But the interest comes from nowhere, which means it can only be debt which is guaranteed, thus the major insult to society. And I'm going to do a comparison for this now, but it's a very sexually crude way of comparing it. So if you don't want to hear it, I'll talk to you later. Bye-bye. But saying that fiat currency has to be your money, it's the only way you can use money, would be like saying that the only way you can have sex is through rape. That is sick, that is gross. But it is sick and gross to only trade fiat currencies within our world of trade, which guarantees debt, which thus would guarantee stress and all the illnesses that come within it. Thank you for tuning in. Have yourself a great day.